The rally rolls on as Santa Claus approaches, and of course, you got to thank the left for their ignorance on this impeachment inquiry. What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is Sunday, and of course, we're back from Las Vegas. A little short on voice, but back, had a great trip and learned a lot, and really enjoyed ourselves out there. But here we are, and of course, another week of higher markets, and again, no surprise. We say it every week. I know some imbecile called me a perma barrel last week when we've been long the entire time. I guess I don't get it. I mean, of course, if some of you would just take that effective listening course, you might actually hear what I say here each and every day, which is we're long. I don't know how I don't think I can put it any simpler than that. But of course, again, it comes down to the we'll call them the trolling nation. In the meantime, here we are, and of course, the news has not been great from an economic standpoint. But again, that really doesn't matter. Okay, what matters is what the market wants to do, and the market says that it wants to go higher. So why would we decide to fight what the markets want to do? But there are some things going on, and of course, we still stand by that we are in the very early stages of a recession. We had the China deal phase 1 last week. Oh my goodness gracious, what a monster. And of course, is there truly a phase 1 deal or just more of the usual BS? And my guess is it really doesn't matter. We continue to go through what this China deal actually means, and based on the global economy, it doesn't mean a lot. Okay. I hear this. I continue to hear the stories about what the tariffs are and what this is, and actually talk to a couple of people in Vegas about some of these tariffs. And of course, again, the import, our side bringing stuff in, is at no more cost. So we'll see how that all eventually plays out, and if there is actually a deal, whether there is or not, it's always hard to say. Again, dealing with China, dealing with a closed economy, dealing with a communist regime, you never really know what you're getting. So are we going to say that the deal is done? Even if it's signed, it doesn't mean it's done. And certainly something could change any day. Okay. In the meantime, hopefully it'll get resolved. Hopefully we'll get free and fair trade. And if that's the case, then that will be good for everybody. Again, that is the win-win part of the deal. Free and fair trade, and enough with the nonsense. But again, this is not just to the China. This is all over. Okay, we have these issues everywhere, and basically all these bad deals come from our bad, crooked politicians over the years that decide to make these bad deals so that they can continue to line their own pockets. I mean, again, it sounds cynical, but it is that simple. Okay, you don't make bad deals unless you have an angle behind making that bad deal. Okay, and I'm not accusing anybody. I'm just saying that it's obviously quite evident that most of these deals are not very good. Going back from NAFTA to any of them, and again, you can argue with me. Listen, I'm not an expert in those fields, but I know one thing for sure. Okay, from being an importer and an exporter over the years, and a few of the businesses that I own, and nothing was ever easy. Okay, so again, I know we didn't have fair and free trade, which is, again, that is what the whole model happens to be about. But I guess one of the questions we want to ask are we being Japanified, right? And if you go back to 1989, when Japan bought Pebble Beach, which was the highest piece paid for every piece of real estate ever, and of course, that was the top of their market. 30 years later, they are still trying to recover from their stuff. They continue to own and buy their government. Are we going to end up doing the same thing? And I think that is one of the big questions. You know, we're already moving towards a digital society. The massive amounts of debt in this country, okay, continue to grow and grow and grow. Okay, so do we have an issue? Is it a solvable issue? And I think under the current system in which we work, the only salvation is to potentially start to relieve this debt. Now, if you remember when we used to do the radio show, and I used to have Dr. Bob on, you know, they talked about that was going to be the end result, is that much of this debt is going to have to be relieved. And again, I don't, you know, I always find that troubling, because, you know, why don't I get in debt so I can get my debt relieved? This goes back into the banking industry, you know, where why not make bad loans? There's going to be someone there to bail you out anyways. Okay. But I think we're seeing a lot of issues out there. Again, that doesn't mean markets are going to go down. It doesn't mean that we're going to have a collapse. It doesn't mean we're going to have a depression. You know, things do not happen overnight. Okay. You continue to knock little pieces out of the wall. You continue to chip away and chip away and chip away, and then finally the walls come tumbling down. So all of this is just warning signs that, of course, we always have continued to ignore until, once again, it will be too late. So we'll see how it all indeed plays out. But again, I'm so frustrated with when we continue to talk about inflation. Now, medical costs, fuel costs, you know, for farmers, input costs, everything is going up through the moon. Yet we aren't making the same amount of money on an increase based on what we have to pay. So, you know, Jerome Powell can get out there and sing his song and dance all he wants and talk about that wonderful model of ignorance they run by. The model don't work. Okay, let's be clear that the model that the Federal Reserve runs by does not work. Of course, unless you're part of the select few that can take advantage of all of this cheap money. But of course, 95 to 98% of us cannot. So what good is it when most can't do it? Now, there's been much reported about the weak holiday shopping. But again, let's not overreact to weak holiday shopping. Number one, this is a short holiday season based on where Thanksgiving fell. Number two, there have been deals forever. You know, this is like any other thing that we've seen. This is like the change in the exchange over the years. You know, over the years, you know, as hours get extended, as they switch to decimals, as all these things change, it changed the volatility in markets. Okay? It changed the way markets work because the pent-up energy all into a short period of time was no longer there. You know, when I first started trading, you know, the trading hours were 9:30 to 4 o'clock. Okay? You know, bonds were 7:20 to 2:20. So now that basically almost all products trade 24 hours, there is none of that steam that builds up. Well, this is the same as the shopping season. There's been we can go back to July when there was Black Friday deals. Okay. So people are buying when there are deals. So again, let's not be misled by what may be weak data or not, because again, it is not compressed into the big Black Friday sales and Cyber Monday. But you see that, of course, there is the continued switch over from brick and mortar to online. Listen, hell, I wouldn't go in a brick and mortar store ever, if I didn't have to, unless I had to see something. So, that continues. So, are we off to a weak start? Yeah, but again, I think overall you'll see that sales are probably equal or better than. So, I think that becomes a problem. And then, of course, we've got we'll call it the ticking time bomb of corporate debt. Again, they have done massive amounts of borrowing to buy back massive amounts of stock based on that cheap money. And of course, listen, I have no problem with that on its surface. But what happens when we start to see a slowdown? What happens if rates start to reset? Again, we're basing everything on the fact that we can hold these rates down here, and certainly based on what the Federal Reserve would do, we've seen the negative rates throughout the globe. So, is it? Again, I don't really have the answer, but I know it ain't good. I know when you see the things that happen, many are not good. Okay. And we have so many things economically that are not great. But of course, you have Mnuchin coming out and saying that the trade deal with China will be a big boost to the global economy. Will it? I don't know. I mean, I don't know who else wasn't doing business with China. I always know, and I'm always concerned when I need to be reassured from somebody telling me that everything is going to be okay. That, I think, is, of course, again, we go back to Paulson in 2008. Every time somebody has to tell me that everything is okay, I believe that shows us even a bigger potential problem. So again, and please, I don't want you to think that I am talking how bad the economy is. I'm only pointing out what I would consider to be many of the warning signs that are out there that say that there's some issues. Not to mention what's going on with some of the stuff from the IG and the FBI and many of the people that I believe will be soon calling their attorneys and taking the fifth, because there is a lot of there appears to be a lot of debt. I mean, a lot of bad things that are going to come out of these reports, and I don't think any of them are going to benefit the imbeciles that are trying to produce them, because I think that this is where they trap themselves into a very bad situation. I think this is known as a bad move that has been made by a group, and of course we'll address that in our commentary later. In the meantime, this is Bubba's Bottom Line. It is Todd Bubba Horwitz. It is Sunday, December the 15th, and of course we're going to step out here for break, and we will be back with more of Bubba's Bottom Line after the break. What's up, everybody? Welcome back. We are here at, of course, wanted to talk about, we're doing our micro mini webinar again on Saturday, and I hope to see you there. You can go get the link to sign up for it if you'd like to join us at bubbatrading.com. This will be our last offer of the year, of course, and we've been just nailing it and killing it and making new highs in our portfolios each and every week. So been really exciting, and if you'd like to check it out, just come and check out the webinar. It's free. There's no cost. But again, you can sign up for it. It's Saturday at noon Eastern time, which would be the 21st of December. And don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with your host, Todd Bubba Horwitz. Oh, that's me. We'll be right back. We'll be going back to Bubba's Bottom Line right now. Welcome back. It is Bubba's Bottom Line, and it is Todd Bubba Horwitz. And of course, last week, I think there was some fairly decent action in markets. I think we remain long. In fact, we turned back to long all four products now. Of the major equities: the Dow, the Nasdaq, the Russell, and the S&P. We remain long, and we will do so until the time says it's not the time to be long. But I think we saw, it was a moderately flattish kind of week. We did have a little bit of excitement on the announcement of the potential trade deal. Again, as you know, we don't buy into that crap. But in the meantime, the market should perk up. And of course, we made new highs once again. So, again, we continue to make new highs in every index, but the Russell, which is still substantially far away, however, it is going higher, and we see no reason to believe that the rally will not continue. I mean, certainly at this time of year, we expect to see Santa. At this time of year, we expect to see some things happening. So again, there is no reason for us to say that the markets won't go higher. Again, I can give you a lot of reasons to think about, but certainly one thing we have learned, and one thing you should always understand, is the tape don't lie, and the markets are always right. And right now, the markets say that they want to go higher. So who are we to step in the middle of it and say they can't? It looks like, as much as it pains me, but I am long it. Oil continues to push higher. It kind of dribbled around 60 on Friday before failing just below. Now, again, it looks like it may indeed want to test the drone bombing highs of 63, 64 before it's all done. Again, we're long. I never like being long oil, but certainly I'm certainly benefiting from it here. And again, I think you look at the OPEC ridiculous garbage that comes out of there. I mean, there's nothing more crap and crooked than OPEC. Okay, I mean, and why we even care is another story. But again, nobody tells the markets or the traders what they should care about. Again, in my mind, it's a joke. That's why you're seeing the backwardation, which means it looks like there's fear buyers. But again, we're long. I'm happy to take the money while I'm waiting, and I'm sure at some point we'll get short once again. Bonds have been very choppy, but I think one thing we've seen from the bond market is indicating higher rates. Bond futures have been rallying. Okay. Which is, rates go inverse, but then late in the week they started to break, which means rates are going higher. Now, we'll see how it works, but I don't see many 3.75 or 7.8% mortgages. And we'll see. Again, right now we are still short the bonds and will stay there. I apologize. We are long the bonds, okay, but very close to potentially changing. You have the gold markets, which now once again, gold has had a little perk up and is getting to another key level as to whether or not it will break to the upside and break this downtrend that we've been in. Will it? Again, we're still short gold. I would say that if we can get above 1490 and close above 1490, then it will probably be time to reverse. Now, we won't reverse until our algorithms reverse, but certainly I could see that being time getting closer. But of course, we're really just in consolidation and have been so for quite a while. And certainly we could see the fall right back and then a break to the bottom. So we'll stay short until the time and when it is time for us to say, hey, it looks like they're going to turn. And that, of course, our algorithm will give us the information there. I thought it was a great week for the grain markets. We actually are still long wheat. We have just reversed the other day to long soybeans, still short corn. But I think you're seeing some much better action now. Last week we did see some volumes come back to the market in all markets. So we are seeing, and maybe potentially we've got to this point where there is some good news and some good news on the horizon. Remember, markets are very efficient at pricing and things well ahead of time, but it looks like, of course, the wheat remains very strong. Soybeans attempted a breakout. As long as they hold above 9, I think they're going to be solid. And corn, at a false break to the downside, held and now is pushing up against upward resistance. Now, again, we're still short corn, but it wouldn't surprise me if we're able to turn that at some point this week, depending on the action. But from my view, it looks fairly bullish. And of course, I do prefer being along the grains when I can. Meats look really solid as well. Of course, we have cattle or live cattle or fat cattle, which continues to push higher and go to new highs. I think, again, is our target. Our last target was 130 is next. We closed out 127.5. Feeder cattle had a huge up move on Friday, almost limit higher. And the feeders look really good. I mean, we have actually reversed back to the long side in feeders. And hogs, they have to close above 70, which they have not been able to do. That's February. They've been around there. They try to get over Friday again, but they're really still in that wide, big trading band between 66 and 70. Now, again, that will at some point change, and certainly I could see a lot of reasons to want to be long hogs, but I'm going to wait. Again, we wait because we're trading 100% mechanically. We're waiting because I don't see any reason for us to get overly involved until the time is right. Because since we're trying to get with the trend, our algorithms have not confirmed the trend yet. Dollar is under a lot of pressure, so it looks like the Fed has finally won out on their pounding of the dollar. We thought the dollar was going to par. It got into the high 99s, but it could never get through. And now it looks like we're going back much lower again. We have broken down. This is our second trip through, and it looks like it could get very ugly. And of course, you saw Boris Johnson win the election, which stuck at the Corbyn, which is a big message, which again, we'll talk a little about this in our commentary. But I think, again, going forward from a trader standpoint, this is basically the last trading week of the year. This is the triple witching cycle. It's the last triple witching cycle of the year. This is the time to say, okay, here we are. And because most traders will be gone after the 20th. So we'll see what it's like. Will we have some action? Certainly it could. It could be, listen, we could have a big rally. It could continue. We could see a lot of new highs. And I see no reason to either A, try to fight it or B, get in front of it. I think you're better off, again, you're better off just trading mechanically, because I think in these markets, it's much more of a challenge to try to trade them actively because of the lack of action. Now, again, it did appear that we were starting to see some action. So let's see what it looks like. But of course, again, this is kind of the winding down week. And the Fed, of course, did nothing last week, which was no surprise. So let's see what it all looks like. In the meantime, again, no reason to fight the tape. Tape says markets are going higher. We're standing right next to it, and we're going to step out of here for a break, and we'll be back with my commentary after the break. What's up, everybody? Saturday, this coming Saturday, the 21st, we are doing our micro mini webinar, our portfolio management, which has just been killing it, making new highs on a weekly basis. If you'd like to check it out, it's free. Just go to Bubba at BubbaTrading.com and you can watch it, see it, hang with me, ask a couple of questions, and we'll have some fun and check it out. And there's no obligation. Certainly come for free. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line and, of course, my commentary. Welcome back. This is Bubba's Bottom Line. This is my weekly commentary, and of course, it is Sunday, December the 15th, and of course, we just saw Jeremy Corbyn get his block knocked off in a massive massacre in England, and of course, it looks like the Brexit is on. And of course, I think this is always a time to be happy and thankful, and it is time for us who really care about America to be thankful for the yutzes on the left who continue to fight this ridiculous impeachment. It's almost like this is trying to give somebody a ticket for walking against the stop sign. The overall, they so far can find nothing. As deeply as they dig, they cannot find anything, but yet they continue this farce of trying to impeach a president, okay, that has no impeachable offense. And again, I'm sure I'll get all you trolls out there that'll start arguing that fact, but it's just quite obvious that there is no impeachable offense. It is obvious is that we're dealing with a bunch of imbeciles. Okay, I mean, again, this is, and thank you for handing the next election to President Trump, because again, he has done, like him or not, he has done a phenomenal job. And again, I'm sure those cards and letters will be coming, and there'll be a lot of rift here. But what do I care? I can take it. I'm tough enough to take the trolling crap that comes out there. But again, the left has shot themselves in the foot, and with this ridiculous policy trying to, of course, they've been trying to get him out of office as he got elected. And of course, let's see what magic candidate they find, okay, to come and run, okay, that will be the whipping person of the Trump administration, because of course, we can see quite obviously that they're not going to get the impeachment. It's never going to get through. And I think you're going to start to see the desertion of many of those that were trying to be involved in it, because it doesn't work. It was stupid to begin with, and there is no impeachable offense. But of course, we'll see. Kind of the world is telling us that this totally socialist party crap don't work. Okay, that's what the world is telling us. You saw it with Corbyn. You're going to see it again, and again, that's why the overall convention will be a broker convention, because nobody wants Elizabeth Warren. I don't care. Nobody wants any of these mass socialists, and Biden's sound asleep half the time. So it looks like a broker convention, and who knows who'll be there. But again, thanks for the holiday present of continuing your imbecilic impeachment attempt, only making the president stronger. Everybody have a great day. Have a great weekend. This is Bubba's Bottom Line. Of course, it is Sunday Night Football. And, of course, you guys were lucky enough to miss my losing pick on Thursday. But I will tell you that I would have had the loser on Thursday night. But tonight we have Pittsburgh Steelers and the Buffalo Bill. I believe that's the game tonight. Of course, you can never remember for sure. But we will take the Pittsburgh Steelers tonight as a small favorite against Buffalo at home. In the meantime, everybody have a great weekend. We'll see you tomorrow with Bubba's Daily Update. And of course, have a great week, everybody. Let's wait for action. Be patient. Be careful. Have a great weekend. We'll see you next time. Take care.